I'm Joe Benaroch, Head of Media Partnerships at the New York Stock Exchange, and you're watching Taking Stock.
Let's do it, folks. 2 minutes to go into the close. A little bit of a bounce back session here on Wall Street for the major market indexes after Friday's heavy volatility. Sectors in the lead for the S&P 500 heading into the closing auction include staples, industrials, financials, as well as technology shares, but we are seeing losses to the downside. The laggards on this Monday afternoon for the S&P include energy, utilities, as well as real estate stocks. Welcome to the broadcast, one and all Partnership Day edition of Taking Stock. I'm your host, JD Durkin, just a few moments away from the ringing of the iconic closing bell, which we do every day down here on the trading floor of the New York Stock Exchange. The one and only Ross Mack himself is on deck. He will join us right after the closing bell today for his take on the Fed, today's price action, and much more. As for the Mag 7, kind of a mixed territory for the tape today. We did see a strong performance from Apple, shares there of AAPL, a few days ahead of earnings, up about 3.5% on the session, with losses to the downside for the Mag 7 being led by NVIDIA, shares down into the closing auction about 2.6%. Volatility spiking after the open. We actually saw the VIX almost reach 20 before pulling back down right now to 16.4 on the day. Yields, longer duration yields on the long end of the yield curve up about 3 basis points. And the dollar, DXY, strengthening for a second consecutive session here on Wall Street following that announcement of Kevin Warsh from the White House on Friday. We will pick up our ongoing market coverage after the team from the NYSE and Partnership Day ring the bell. Time now for the close.
The GOAT himself.
There you have it, Joe Benaroch and the incredible team from the New York Stock Exchange, along with select content creators and people participating in our annual event known as the New York Stock Exchange Partnership Day, here to do the honors. Closing tail of the tape, the S&P 500 up 0.5% to a fresh. Did we miss an all-time high by 2 points today for the S&P 500? The Dow in positive territory of full percent. The NYSE Composite Index up 0.7, while they take their. I can't turn around. I have to do the show. And the small caps up a full percent. Let's bring in the man himself, Ross Mack of Mackonomics. You know him from your social media feeds, from Yahoo, from Netflix, from so much more, and now from Taking Stock. My man, great to have you here today.
Oh, this is feeling like Christmas Eve, brother.
It feels like Christmas Day to me here.
Oh, wow.
Okay, so we're right about at all-time highs. We did miss. Wildly volatile session on Friday after we had the announcement of Kevin Warsh to the Fed. As you look up and you see the big board, what are you kind of most tracking in the markets these days, Ross?
Well, I think what you got to do is look at it and say, what kind of phase are we in right now? And I think we're just in a digestion phase. People are trying to digest to actually figure out where are we going, right? I think we're not just trying to chase the AI trade anymore. People are looking for some cash flow names, more stable things, and I love it. Like you say, we are a few points off all-time highs, yet people are still feeling a little volatile, and what that is that it's a rotation. It's not necessarily an all-in-all risk off, but we're rotating into some of those names that are a lot more stable and not actually chasing those high-flying, high beta names right now.
Yeah, when we do have some of the risk-off tape here, we do see outperformance from energy, we see outperformance from healthcare, some of those sectors. Where else are you following, or your expectations we might see continued rotation away from tech and away from discretionary, those highly concentrated sectors?
I'm liking staples right now,
like
and
staples?
I think largely because they're obviously cash flowing. I think when you're a retail investor, one of the things you want to look at is like, okay, is this going to be inelastic demand? And I think at the end of the day, you have a lot of people that, irrespective of where they are financially, right? We talked about, offline, kind of, where people feeling, is inflation actually starting to actually seep down and those prices being passed down to the end consumer? The reality is, yes, they are being passed down, but they could actually stomach that. And I think we're going to see maybe less discretionary spending, but those staples are those things that I love, man. I think Target is kind of cheap right here.
Okay.
That's just my own personal opinion. Obviously, you got the Walmarts, the Costcos of the world. And then I think you kind of wait. And obviously, we will rotate back into some of those tech names.
Yeah, what are you following for the Fed? It remains data dependent. We got Jay Powell left for 2 more FOMC meetings, but it always takes, it's a vote by the committee. It's not just one person now. We were trying to remind our viewers of that Kevin Warsh is important. You got to convince a whole committee about the path of QE or monetary policy.
I think the reality is it's kind of one of those things, damned if you do, damned if you don't. The Fed doesn't believe they won the war on inflation, but I also think, right, it's a huge, poker game, right? Who's going to call whose bluff, right? I think everybody knows that, the current administration has been trying to effectively kind of bully, Jerome Powell and those guys and saying, hey, let's actually lower interest rates. But they have been trying to remain independent and actually say, hey, I'm not going to lower rates just because you tell me to. I'm not. And literally, we're trying to see if they're going to call each other's bluff. And I think right now, do we get the Fed to lower rates? Maybe. But I think what's happening is this, even if they wanted to, they kind of got to stand firm and say, I'm not doing it.
Yeah, we mentioned.
I'm not doing it.
I'm not doing it. We mentioned volatility earlier. Speaking of volatile assets, the Bitcoin story, which is down more than 35% off its late October highs. Right now, about 77 and change. Do you view yourself as a buyer or seller for Bitcoin at these particular levels? How do you track it?
I'm a marginal buyer. I think anybody at home. The reality is it's an asset class you want to own. So don't get caught up in the fluff right now. Do I buy it today or tomorrow? You want to set a time where you're going to buy it the same time every week or every month, whatever it is. You want a dollar cost average into the asset class. However, I do believe it could potentially come back down to like the 70s or so. But here's the one thing I want people to understand, right? You got to ask yourself, where are we in the actual crypto cycle? And when I look at Bitcoin, I say, okay, where are we in this cycle? Here's the facts that you need to understand. Bitcoin over 8 times have always went down over 50% of the time. And guess what, guys? It has gone on to recover and make new highs. So we are in that same type of cycle, but the one thing I do realize is that in this instance, we have much more institutional holders. So I do believe this time will be a lot less volatile. Can it go lower? Absolutely. Will we see the 80% sell-offs and the 70% sell-offs that we once saw? I don't believe, largely because there are much more institutional buyers involved.
Ross Mack, I'm almost out of time. Where can people go if they want to find more of your stuff day to day?
Follow me on all social platforms. I'm Ross Mack on Instagram, at Macconomics on TikTok. Find me on YouTube. But man, big shout out to my brother JD, man. This guy's the GOAT. There was so much stuff going on. It was like a football game behind us, and this guy was able to stand. I couldn't even understand. And I'm coming in here. I never get nervous, but I'm like, wow, I'm next to JD. I got to do my thing.
I'm just trying to keep up with you. And speaking of football, the next time we get you down here, look, the great Jim Cramer's got an Eagles helmet. We're going to get you a Chicago Bears helmet just for you, my man. The next
Me
time
and JD talk every day, Giants and Bears. I don't think we bet, but the Bears actually did beat Giants this year.
Yeah, maybe next year. Yeah, they did, my man. You are welcome back on the show anytime. The great Ross Mack, thank you for coming by. Jeremy, I'll grab your mic. We'll talk to you soon, all right? Howard, you're going to head this way for a walk. We bring you the latest event contracts from our friends over at Polymarket. Hey, it's the start of the month. Ross Mack and I were just talking about Bitcoin pricing. Event contract participants trying to figure out what price will BTC hit in the month of February. 42% odds it drops down to 70,000. 10% odds it drops down to 60,000. That would be its October 2024 level. 26% odds it actually climbs off these current levels up to 90K. 6% chance only it hits 100,000. That right now is about where its 200-day moving average is. The contract will be determined by the 1-minute closing candles on Binance. Already more than $9 million in terms of a total value on this particular contract. Bitcoin was down, however, 14% for the month of January. We will see how February goes. Howard, we'll take a look at 2 notables. These are 2 very different stories for the day. We'll start with the House of Mouse. Despite the fact that they beat on earnings, they beat on revenue, it's all about forward-looking guidance. They did report 163 adjusted versus the street's expectation of 157, but it was that guidance maybe a bit more muted than the street had been hoping for. The experiences division, that includes theme parks and cruises, did cross $10 billion in quarterly revenue for the first time ever. Also follows succession planning for longtime CEO Bob Iger. That's a crucial story for Disney. Shares are down about 5% already here in 2026. Finally, Howard, let's spin around. Let's take a look at Carnival Cruise, up 8%, one of the strongest performers in the S&P 500 today, boosting all of the other major cruise lines as well. Running into a little bit of resistance on the charts at this current level at 32. We will see if we're primed for a breakout or not. Shares are up already 5% on the year. The average one-year price target sits at 38 a share, upside potential of about 17% off this current level. All right, Cheddar's very own Chris Castellino is now back with more on the latest in home tech from CES 2026 in Las Vegas, Nevada. Take a look.
Imagine a home where robots handle all of your laundry, clean your windows, and can even wash and dry your carpets while you're away. At CES 2026, the smart home innovations we've been waiting for are available this year, and it all starts right at your front door. And if you thought planning meals and managing calendars still sounded like too much work, well, the robots are here to help. And we're not just talking about robo-vacuums anymore. This year's CES showcased a new generation of AI-powered robots that can tackle everything from dishes to laundry to the worst household chores you've been avoiding all month. Most impressive was SwitchBot's brand new Enero H1. The H1 represents the company's bold leap into humanoid territory.
Equipped with the local AI model, it's called Omni VLA model. It's trained by ourselves, so it can identify every object. There's some clothes on the couch, so he'll identify, oh, that's the clothes that need to be washed, and go to the wash machine and open the door and recognize the button you need to push.
The Enero H1 is expected to launch in Q4 of 2026 at a starting price of $10,000. SwitchBot believes this is the most accessible household humanoid robot on the market. But if a humanoid wandering around your home might make you feel uneasy, Ecovacs is offering a more specialized solution for one of the most hated household chores: cleaning windows. Introducing the company's latest WinBot W3 Omni. The WinBot uses powerful suction to stick to any window, indoors or outdoors, and cleans in a systematic pattern. It can detect window frames and borders, and with an 18-foot cord, it can handle most floor-to-ceiling windows. This product is perfect for city dwellers who know the outside of their apartment windows is always the hardest to reach.
So with the W3 Omni, we're able to automatically clean the cleaning pad with this washing machine here. So it's very easy to remove the pad. And then I'm going to put it into the automatic washer. And you see there's brushes here with the bristles to remove any dirt and grime from the pad. And then also a squeegee here to remove any excess water. So it's ready to clean for the next wash.
The WinBot W3 Omni launches this winter at a starting price of $700. And finally, if you've ever spilled something on your carpet, you know that current robot vacuums can only do so much. Roboton, a company founded in 2023, is launching the world's first modular robot that washes and dries your carpets. The R2's modular design means you can swap between carpet washing and regular vacuuming. But the real innovation lies under the hood.
We have the free-stage carpet washing system, and also we have the AI intelligent algorithm. With this, we can detect whatever surrounding it. You can do it automatic obstacle avoidance.
The docking station can heat water to 140 degrees Fahrenheit for deep cleaning. And with large water tanks, one can clean 300 to 400 square feet of carpet automatically. From food stains to animal urine, the AI can detect which areas are dirtier and reprocess them until they're completely clean. The product will be available for purchase in 2026, with pricing expected around $1,000. The ability for our homes to learn our habits, anticipate our needs, and handle the tedious tasks that consume our precious time is no longer just a concept. The future isn't just on display, it's moving in. For Cheddar, I'm Chris Castellino.
Welcome back to the show. We are live down here on the trading floor of the New York Stock Exchange, and time now for a few headlines in the world of fintech, crypto, and artificial intelligence for your Monday afternoon. First up, the crypto majors are in mixed positioning at this hour. We are seeing a bit of upward momentum for Bitcoin, currently up 1.7%, and ETH up 3%, but Solana, however, currently down about 10%, the hardest hit of the majors on the day. Next up, tokenized equities are approaching the $1 billion mark after surging nearly 3,000% over the past year. This comes as regulatory clarity and institutional rails push real-world assets deeper into markets for cryptocurrencies. And speaking of regulatory clarity, at this moment, White House officials are meeting with major banks as well as crypto industry leaders. It's a high-stakes push to salvage what may be left of the so-called Clarity Act, with stablecoins rewards and the future of U.S. crypto regulation very much hanging in the balance. Talk about drama down in Washington. That's a wild one with Brian Armstrong and them. All right, let's say hello to our next guest, a very special guest as well, Linwood Bibbins, CEO and founder of Reach TV, the man himself, the one and only. Thank you for being here. Great to have you.
Yeah, thank you. I appreciate it.
Can we talk to me first and foremost about what it was like for you and the team to be down here at the New York Stock Exchange today in celebration of Partnership Day upstairs in the boardroom.
I mean, Joe is an incredible leader. I think what they've been doing at New York Stock Exchange as a media day in 2 years is incredible. The expansion, the partnerships, the community he's already built. I mean, he's one of a kind. So I think that's why everybody's here.
Well, speaking of one of a kind, so is Reach TV. Linwood, we've been thrilled the last few weeks to be able to say this show every day, live at 4 o'clock East Coast time, Taking Stock, is on Reach TV. From where you're positioned, what does that mean?
Well, I mean, we service travelers, and they're business travelers. So having a show on Closing Bell that's really giving them, informing them, is what people want. We have a big audience in the morning of business travelers, and then right around this time of day, every single day. I'm getting pictures and calls and texts from airport authorities, concessionaires, and friends of mine traveling. Like, this is awesome. So thank you and congrats, because it's a great show. It's taken off well.
Thank you as well. It's great. And if everyone watching at an airport, hope you had a safe flight. Don't forget your bags on board. How about the Nielsen partnership? What should we know there?
Yeah, I mean, Nielsen, it's live now. So we are now on Nielsen One. So we're cross-platform measured across everything. So all of our audience is incremental and additional to every other platform, and they're able to measure it in the back of Nielsen. So agencies, brands, partners can all see that viewership in real time.
It's not just Partnership Day here at the New York Stock Exchange. This is also Super Bowl 60 week, which we are celebrating. I know you are celebrating it in a special way more than the rest of us. What should we look for in terms of live sports integration into Reach TV, especially ahead of Sunday's game?
Well, our team's already in San Francisco. We're on Radio Row. We're doing interviews from Radio Row right now. So we're part of that. We film all week. Then there's NFL Honors Friday night. Then there's events throughout it. And then we air, NBC and Reach TV both air the Super Bowl this Sunday. So for travelers, never missing one play, not one thing, we have them. And this is our 5th year airing the Super Bowl.
Yeah,
so it's pretty exciting.
That's amazing. If you don't mind me asking, how did those relationships come together? Because from the outside, we see those headlines, we see the distribution. We have no idea what goes into actually making those partnerships work.
Well, I think a part of it is, for us, is always how are we servicing our partner? What do they want first? Then we look at that and we reverse engineer it, and does it make sense for us? When we start with we're a travel entertainment company. So our whole focus is the traveler. What would that traveler want, and can we provide it? And then can we be in the place that they're going so that we can be there and service them? So when the NFL saw the opportunity to have millions of people every single day, and by the way, Sunday is the busiest day of travel every week.
Super Bowl Sunday.
Every week. Every
yeah,
week. Sunday is the busiest day of travel, and happens to be NFL's biggest day. So having NFL games in the airport every Sunday is humongous.
Before I let you go, Linwood, I got no doubt you and the team from Reach TV, you're cooking on a lot of things that you can't quite yet reveal to us, but if you could peel back the layers a little bit, give us some sense what more to expect here, or things that really excite you for 2026.
Well, I think there's an opportunity now for even more activations in the airport. I think people want to be together. I think we have a lot of things that are cool, AI and data, but what I've seen coming out of CES, what I've seen coming out of all these events that are happening is the human experience is now the new luxury. The human experience is really what's driving so much more engagement, and we're giving them those tools, and we're that platform to allow them to do that.
Linwood Bibbins, CEO and founder of Reach TV, congratulations on all the success. It's great to be partners with you here.
Yeah,
thank you. Come back on the show anytime. It's great to have you. Don't go anywhere. Much more Taking Stock coming up from the big board after this. All right, welcome back to the show. You're watching Taking Stock live from the New York Stock Exchange. Time at this hour to bring you the latest headlines in the world of startups, raises, as well as rounds for your Monday afternoon. First up, OpenAI laying the groundwork for a potential fourth quarter 2026 IPO, accelerating plans as competition with Anthropic intensifies and as investors look for a public market way to play the next wave of generative artificial intelligence. Next up, Bloomberg reporting Elon Musk is considering a potential merger between SpaceX and either Tesla or his AI firm xAI. It's a move that could reshape Musk's growing empire, maybe also complicate the SpaceX IPO timeline as well. And finally, Robinhood deepening its own crypto push, set to invest in Talos at a $1.5 billion valuation as demand surges for institutional-grade digital asset infrastructure. Our third and final guest of the show joins us now. Say hello to the great Marco Palladino. He is CTO and co-founder of Kong. Great to have you down here at the big board and on the show. Nice to have you.
Well, thanks for having me here.
Can we start first and foremost a bit of an introduction to your work at Kong for anyone who might not be too familiar, and what would you say are among your top priorities here in early 2026?
Well, so I'm the CTO and co-founder of Kong. We are experts in building platforms for APIs and AI, and of course, our priority for 2026 is enabling our customers to take advantage of the agentic transformation.
What does the agentic transformation mean for you? You've been hearing a lot more about agentic AI the last year. How much progress have we made towards that?
Well, organizations are building agents to transform their internal business processes, creating new revenue streams, creating new customer experiences. And in order to do that, they need a platform that can handle all of the connectivity that these agents are generating with the models, with the APIs, with their data. And that platform is what Kong provides.
What are the main pain points that they're coming to you? They say, hey, artificial intelligence itself is great. We want the agentic version that can be a little bit more proactive on our tasks. What are those tasks and things they're telling you?
Well, they're asking us that they want to build agents that actually do things. And in order for agents to do things, they need to get access to customer data and internal systems and services that the organization provides for their existing products. Now, in order to expose these APIs to the agents, we have to expose them using new protocols, new technologies, new data governance challenges, new compliance rules that have to be in place in order for them to be successful with it.
This is all about the need for further AI connectivity. In your position, you got to kind of see where the puck is going to be. What are your expectations for how that conversation may continue to evolve here in 2026?
Well, in 2026 is going to be the year of agentic AI. We spent half of the history of the internet building user interfaces for humans. We're going to be spending the next half of the internet to build user interfaces for machines. And these machines are agents that can autonomously complete outcomes and tasks without any human intervention whatsoever.
What do you feel most separates Kong from other competitors in the space?
Well, Kong has been built for this new stack that's emerging. Everything we've been doing in the past when it comes to cloud native, when it comes to managing the SaaS, when it comes to managing microservices, that stack does not work in this new agentic world because AI and agentic AI bring a whole new set of challenges in observability, in data governance, in security, such as those platforms do not work very well here. Kong is different because we're building for this new agentic world and we have done APIs for a decade, which is the natural evolution of APIs. It is agentic AI.
Marco, is there a need for further regulatory changes or things for lawmakers or policymakers out of Washington to sort of tweak to continue to advance the conversation that Kong is situated in?
Well, we're seeing some regulations coming up. For example, the EU AI Act, is a regulations for highly regulated industries like finance and financial services and healthcare. And we all know that compliance is not going to get smaller from here. It's only going to get bigger. But it is for a good reason. We do not want to leak sensitive customer information and customer data and create damage to the end user. And so there's going to be more compliance, more regulatory pressure to make sure that the agents do what they're supposed to do without putting anybody at risk.
I got less than a minute left. What have been some of the biggest lessons you've learned leading Kong through these various platform shifts so far?
You got to keep innovating and never stop innovating because the world changes fast and you got to change with the world. Otherwise, you're going to be out of business.
Marco Palladino is the CTO and co-founder of Kong. Congratulations on all the success. Thanks for being on the broadcast.
Thank you.
Really good to have you. Don't go anywhere. We're going to take a quick break. When we get back, the latest from Scarlett Sieber at Money 2020. More Taking Stock after this.
Welcome back. I'm Scarlett Sieber from Money 2020, and this is Jargon Translator, where we break down the finance lingo that sounds like a secret society, but it's actually ruling the world. Just like a secret society. Today's term is going to be ISO. No, it's not a camera setting, it's an independent sales organization. Here's the deal. ISOs are the middlemen of merchant payments. They're the folks who help make business accept credit cards by partnering with the big payment processors. Think of them as the matchmakers of the payments world, connecting your local coffee shop to Visa and MasterCard so you can tap and go. That's really important because this matters for scale. ISOs bring thousands of small businesses under one umbrella, negotiate better rates, and provide hardware, software, and even support. Without them, every mom and pop shop would be trying to cut deals with giant processors. We know how that's going to end. Good luck. So here's the twist. ISOs live in a competitive jungle. Margins are thin, tech is evolving, and if they don't keep up with the integrated POS systems and fraud tools, they be toast. So next time you swipe at your favorite boutique, remember that's an ISO behind the scene that's making that transaction happen. ISOs, because someone has to play Cupid between your card and your cash register. And with that, that is your Jargon Translated.
The major market indexes on this Monday, February 2nd, in positive territory and a couple all-time highs, at least for the New York Stock Exchange Composite Index, and the S&P 500 missing an all-time high by only 2 points. Staples, industrials, financials, as well as technology stocks. Those are your big winners on the day out of the 11 sectors in the S&P, with some losses to the downside led by energy, utilities, as well as real estate. Quite the story for gold and silver. We know that has been the tail of the tape for several months, but given Friday's volatility, we did see both of those precious, silver being also an industrial metal, fall in the session here today. Silver reaching a fresh low, 71.39 in the session, down more than 30% since Thursday's session as well. The crypto majors, as we mentioned a short time ago, did finish the session here on Wall Street in mixed territory. Also catching a bid with all the green on the big screen, the airlines led by Frontier, the big banks led by Wells Fargo, the semiconductor stocks led by Intel, as well as the dollar discounters, a very strong performance from names like Dollar General. Those gains led by 5 and below. Tomorrow, earnings, PayPal, Pepsi, Pfizer, Merck, Chipotle, AMD, as well as Supermicro. We also get the S&P and ISM services prints, which will cross the tail of the tape before we reach 10 a.m. That's going to do it for today's partnership edition of Taking Stock. Have a fantastic Monday night. We'll see you again tomorrow from the New York Stock Exchange.